What's going on, guys? Brian's here. Today's Monday, August 19th, 2024, and another day in which the market has closed up just about 1%. What we're looking at is the 0DTE gamma exposure profile from Quant Trading app at 10 a.m. Eastern time, so 30 minutes after the market opens. If you're not new to this YouTube channel, you know I like to focus heavily on gamma exposure. This is the price action here for today. I like to use the gamma exposure profile about 30 minutes after the market opens, as I think it provides enough context for the day and it can help put you on the right side of the trade. So this is the SPX on the left hand side and this is the SPY. I'm not going to go over the weekly gamma exposure profile in this video, but for those of you on YouTube that are not Quant Trading app Gold members, I figured I'd just share this for you guys here. This is the weekly aggregates gamma exposure profile. This video is also under the assumption that you understand the basic principles of gamma exposure. If you're entirely new to this style of trading, I suggest you check out my playlist in the description, in which I have a bunch of gamma exposure videos. It's like anything, the more you expose yourself to it, the more you see this, the more it becomes natural for you. For context, this is the SPX zoomed out. This is a 15-minute time frame, and this has been price action for the past couple weeks. The market has been in a strong uptrend, and the gamma exposure profile has looked almost identical every single day. This is that gamma exposure profile, 10 a.m., 30 minutes after the market opens. If you guys have been checking out any of the videos in which I've been putting out over the past few weeks, at this point, this should become pretty systematic for you. If this is this current spot price, so at this snapshot when this is generated, this is the SPX's current price. I like to look for the closest support and resistance strikes. This right here, 555, would be our closest potential support, and then 570 would be our closest potential resistance. This is our highest positive gamma strike. The gamma profile is in an overall net positive gamma environment. We can see all of this positive gamma right here. In other words, this is telling you, it's screaming at you, do not short the market right now unless price was to get below where 540, the 545 area. In this area is where there is some negative gamma. But as long as price holds above this area right here in the middle, it's essentially in a buy the dip type of mode. So 540 on the SPX would essentially be right in this area here. So this is our 540 zone. So I'm just going to draw a level right around this entire area. The reason I'm intentionally drawing it around here is if we take a look at the previous day's price action, which would be Friday, we can see that this is potentially a demand zone. In other words, if the market was to get down to the 540 area here today, would this realistically be a good place to short? In my opinion, no. You want to wait for a demand zone to give out. You want to wait for a support level to break before you can say you can comfortably enter a short trade when you're trading the SPX. If you're an even more conservative trader and a safer trader, you can let a level break, let it retest that level, and see if you get confirmation of weakness to then take the next leg down. This is what it would have taken for me to consider taking an aggressive short trade on the markets. However, that did not happen because our gamma profile is telling us we are in a buy the dip mode. If the market was to dip down to this area, support will likely hold at 555. If this level was to give out, the market would likely hold support at 545, 540. If it broke down below this area and we started to see negative GEX start growing, we started to see some heavy put volume coming in on the chart, then we can expect some follow through to the downside. This is letting us know there's a lot of participation up here. 30 minutes into the market opens, there's a lot of volume up here. Another way in which I like to say this, it's almost like there's a party going on up here. We can see that price wants to gravitate towards these high positive gamma nodes as it is in a net positive gamma environment. The trend is currently up. The gamma exposure profile is telling us there's a ton of positive gamma. There's a lot of participation happening up here. The Quant Trading app gamma exposure profile only shows us the strike prices that has enough gamma exposure that's worth measuring. In other words, 625 is the highest strike price at this point in time that has gamma worth mentioning, and so is the 540 on the lower end. So in other words, this is the maximum range for the day from a gamma exposure perspective. However, we can narrow it down and say what strike prices have enough gamma exposure that's really worth mentioning. You always want to take a look at the highest negative gamma, so that would be 540. All the way up until you can see where does it look like things start really wavering off on the upside. If we're in a net positive gamma environment, I'm covering most of the positive gamma. If this was red and we were in a net negative gamma environment, then we would be doing the opposite. But for the most part, we're in positive gamma right now. So this essentially becomes the safe range for the day in terms of if you're trying to gauge how far or how high do you think the market is going to go. You can see right here, this net negative gamma pretty much matches right here. This is our highest negative gamma. This is where the positive gamma essentially just starts getting really flat. It's pretty important that this strike price that is this far away, this is 610, has almost the same amount or the same size bar as this strike right here, which is only 1, 2, 3, 4 strikes away. A strike that is 4 strikes away has almost the same amount of gamma as a strike that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 strikes away. And there's this much gamma up here. There's this much volume up here. This is how you can create a structure from yourself. I believe it was the previous video in which I used the analogy of a scale. If this area is about the middle of the scale here and we draw a line down here and we say at what side seems to have more weight, we can see that there's a lot more weight on this side relative to this side. So the scale is going to tilt towards this way, which means price wants to gravitate towards this way unless price breaks below this area. This is where you flip the script. You always want to have some sort of idea for where your analysis is wrong. Where do you need to flip your idea or your analysis or your thought process? You don't want to be a stubborn trader. Gamma exposure is just one way to analyze the market. Just because we're seeing this does not mean the markets won't or can't go down. You as a trader need to define your risk, and you need to know which levels are you going to risk off of. That means if you are long, this is your area to risk off of. There is some security in knowing the absolute gamma strike is 550. So this essentially should be your early warning. Price should not get below here or should not close below here on a 15-minute time frame. This is your early warning that something is wrong. But for the most part, as long as this remains intact, the market does not want to go below here. How far does it want to go? We're seeing enough information on this gamma exposure profile to show that there are reasons to believe we might go up to 610. If you trade deep out the money options, that's pretty viable. If you're a little bit more conservative, then this would be the strike price. In my opinion, that's a little bit safer because this is pretty far out the money. If we take a look at the chart here, we can see that the market did pretty much make it all the way up to 5610. But at 10 a.m. here, so this is about 10 a.m. Eastern time, we're trying to form our analysis for where do we think price is going to go for the day? How do we think it's going to trade around certain strike prices? We can see it got choppy around 575. This green line on the charts is being drawn in from the quant trading app intraday script. So that's this one right here. If I were to turn off all the studies, you guys can see that this is being drawn in automatically, and it is calculating the gamma exposure for the Friday expiration and plotting it on our charts. 0 DTE gamma exposure changes pretty frequently, so we can see that this is the highest positive gamma for today. It's 570. So 570 is right here. For the Friday expiration, it's 575. So this whole area right here is an area of a lot of gamma. So we can expect price to be pretty choppy in that area. Once price starts holding above it, it's naturally going to want to start gravitating towards the next high gamma exposure strikes. That becomes 580. We see 5600. This is 5600. Look at how price starts trading around that level before we have a little of an end of the day pop here. In my opinion, there isn't really much of a way to be prepared for the last 10-15 minutes of the day, as sometimes we can see these random sporadic 10-15 point moves in the last 10 minutes of the day. Hopefully what I've been showing in these videos is at 10 a.m. Eastern time, this gamma profile provides so much context, and just like anything, if it's a sport, the more and more reps you put in the gym, the more and more you do something, the more and more you start analyzing this, you'll naturally start feeling a little bit more prepared with price action. Someone has asked the question regarding what happens on a day when things don't really go according to plan. If we were to zoom out here and let's take a day like this, for example, this was Wednesday of a couple weeks ago. So this is the 7th of August in which we can see the market ended up selling off here. A major advantage of quant trading app is there is this archived GEX graphs here in which you can select different dates. You can load the 0 DTE, and there's certain instruments that are cached within quant trading app. This is the gamma exposure here. So let's just jump to our 10 a.m. profile. For starters, you guys can see that this profile looks very different from today's profile. This is a day in which things look pretty positive. This is a day in which things look pretty mixed. We can see that there's negative gamma spread all over this chart here. We're not in an overall net negative gamma environment yet, but we can see that it starts popping up here. You guys can see this is where these red strike prices starts popping up. The moment the overall net GEX turns negative, that's where these levels start turning red. It's just a nice visual cue So you don't need to stare or try to analyze these large numbers that are too abstract, in my opinion, for a trader, especially on a 0 DTE standpoint. You just want to know, are we negative or are we positive? This is saying right now we are positive. However, if price breaks below this strike price right here, this is that massive support. As we can see, the gamma is letting us know. If price is going to remain pretty bullish, why is it breaking below the highest positive gamma strike? That does not make sense. Then this is the second highest positive gamma strike right here. So on a day like this, we have 305 and we have 295. This becomes a range or an area, as I like to consider it. We have this 10-point range right here that is essentially creating this zone. If price gets below this zone, it means something is going wrong. This is where the bears are waiting to play below here. This area above here, bulls are essentially winning the day. In between here, things look a little crazy or choppy, or at least that's how I would expect price to go. Sorry, this is 10:15. I didn't even realize I was looking at 10:15. This is the 10 a.m. So not really much change between these two time frames here. We have these arrows. We can jump throughout the day and see how things ended up playing out. And then right here, we can see midday, price is now broken below this. And look at what happens. It breaks down, it drops. It ends up coming back up, tries to retest the zone before it gets rejected. And then we have a nasty drop. And then we can see all of the gamma starts turning negative. There's barely any positive gamma up here. The bears are coming out to play. You guys see how that just shifted from positive gamma to negative gamma. Price makes a nasty drop. If we were to go back to the start of the day here, here's 10 a.m., how can we prepare ourselves for this? Knowing these levels is a major benefit. So knowing if price breaks below 5,300, let's zoom in on this day right here. 5,300, if we were to mark it on the chart, is right here. So this is our price action. It's holding 5,300. If it gets below 5,300, it's entering bearish territory. What is the next significant strike? We have 295. Let's plot that out on this chart. Here is 295. So right here, if price now is below here, things are in trouble. This is the drop. This is the retest. We see price ends up going lower. Where does it choose to stall out? Let's just take a look at the chart here. As price breaks down below here, we have significant strikes at 270. We have 245. Where's 270 on our chart? This is 270. This is 245. So I'll actually just draw this out again here. Here's 270. I'm just loosely drawing this because I want to fly by this here, so I'm not wasting too much time. So here's our 245. You guys can see, look at the price action here. This level breaks. What do? We drop down. It's an ugly drop all the way down to here. It doesn't really stall out until we get to 240, until we get to 245. Again, it says 246. You know what? For anyone that's OCD out here, I'll put in the exact strike just to make it easy for you guys. So there you go. Look at the price action as we get down to 245. That's what we would expect here. There's a lot of volume at this strike price right here. There's a decent amount of negative gamma. Remember, price is all the way over here. Look at how far away this is. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 strike prices away. And it has the most amount of negative gamma. So many strike prices away, and it has the most amount of negative gamma on a 0 DTE time frame 30 minutes into the market opens. If price breaks below this positive gamma supports, this becomes a viable target for you. As we took a look at before, this is now middle of the day. Price is broken down below here, 245. We already had interest of this level. It was already a viable target for a deep out the money lotto type of trade. If you wanted to take the risk on deep out the money 0 DTE puts, if you wanted to run some sort of 0 DTE out the money put butterfly, the moment we broke here, this becomes in play. As we continue throughout the day here, we're now at 245. Obviously, it's pretty dominant. It's pretty significant. It's going to stand out. We can see that there's still a lot of traders that are speculating all the way down to 5,200. Whether they're selling these puts or buying these puts, that's irrelevant. We just know that there's a ton of volume that are coming in this deep out the money strike price. There's a decent amount of liquidity down there. We don't know if it's going to get down to 5,200, but we did know if we broke 5,300, this is a likely area in which we will go. So I'm showing you guys, here's an example of a different type of day in which things can go wrong. If we zoom out, that is not the type of gamma profile in which we're seeing here. Guys, if you're a gold member in Quant Trading app, I highly recommend you come back to this archive gamma graph page, take a look at these days here, pick a date and time, load the 0 DTE. You can also uncheck the load 0 DTE, submit it, and take a look at the weekly expiration gamma exposure. And this is how you get really good at this. It's going back, taking a look at days in which you would have want to know What could I have done better? How could I have been more prepared? 30 minutes into the market opens, the gamma exposure profile can provide a lot of context, and that's what I'm hoping to show you guys. Lastly, I just wanted to go over the 0DTE SPX trade engine. For those of you that are QTA Gold members, there's been a decent amount of interest lately in this power strike here. This is the Quant Trading app Discord. This is the gold section for premium members. The gamma exposure, by the way, for the 0DTE comes through in this feed here. If your focus is mostly on the SPX, you can just use the SPX data page, as the gamma exposure is also printed here in addition to this graph that's also printed on these 5-minute increments. So I'm just going to play out the tape. At this point on this YouTube channel, this shouldn't be your first time seeing something like this. As I'm assuming at this point you know what this is. Here's our power strike. Here's our absolute gamma strike. This is that 555 strike. They're not currently latched onto the same place, so this is a little bit of a mixture here. But let's just play out the tape and let's see what happens with the price. So now we can see we end up popping, going sideways, choppy, choppy, choppy. This is now 1020. Market pulls in. Where do we pull into? This is the strike price of the highest put volume. It's also our absolute gamma strike. You guys know these gamma levels tend to act as key support and resistance levels. If we take a look at the SPY, I believe this was also the 2-day anchored VWAP was in this area. I'm just going to turn on my studies, and then let's just clear this chart just so we can see the clean price action. So here's our 2-day anchored VWAP right in this area. It's pretty much where there was a decent amount of demand on Friday right before the market closed. We're coming down to the 2-day anchored VWAP. So we have a little bit of confluence. There's a little bit of context here. There's multiple things lining up at this strike price. It's not just a random level. How much confluences do we have? We have it's 1, it's the highest put volume strike. 2, it's the absolute gamma strike. 3, it's the SPY's 2-day anchored VWAP. 4, it was a demand zone from Friday. I know a couple of you Quant Trading app Gold members caught this trade. As you guys mentioned in the chat, you took a long trade here. Great job, guys. But at this point in time, it's pretty interesting that the power strike is still all the way up at 590. In my opinion, there isn't enough of a reason to speculate that we're going to go that far up early in the days. As you guys know, the power strike gains more relevance as more time passes by, especially after 11 a.m. Eastern time. It's still pretty early in the morning, but it is trying to gauge in terms of where it thinks the market is going to land later in the day. And it's still latching on to this strike, which is saying this is the call volume 1. So this is the strike price that has the highest call volume. This is the strike price that has the highest put volume. So we're currently at a potential support level. If bulls were to take complete control of the day, there is the opportunity here from a data perspective, at least from Quant Trading App's data, to let us know this is a possibility for today. In my opinion, this is the more sensible target at this point for an out the money trade. So 580, 590 is a little too deep out the money, especially since the market has already been up for a few days. But nonetheless, as we continue to play the tape, we can see the market immediately bounced, as we know, continued to go up, and then we hit here. Now the absolute gamma strike has moved up with price, and we continue. This level should hold as support, as you guys know. Now our power strike has dropped down. I'm just going to rewind this a little bit here. So now this level should act as some sort of resistance as it is latching onto the 1 sigma close strike of 580. And then we can see it's chop, chop, chop for a bit. It's holding. At this point, this is enough to enter a 0DTE at the money fly, in my opinion. We have the absolute gamma strike. We have the power strike. We're pretty close to the 1 sigma close. We're just around the expected move from the open. This is usually going to lead some sort of choppy price action around these high positive gamma strikes. However, this is not a trade in which you want to sit in for too long. In my experience, usually about a 45 minutes to about a 60-minute hold is a decent time to usually get about $1 decay on an at the money iron fly, depending on how wide your wings are, of course. But we'll continue to play this out here. And now we can see we have broken past the power strike. So we have broken past this resistance level. So the expectation at this point would be if we come back down to this level, we should hold as support, especially if we got down to this absolute gamma strike right here. This should hold as support. This zone is our expected move for each 15-minute candle. So this is letting us know this is the expected move within 15 minutes right here or here. It's constantly adjusting throughout the day. So this is an extra reason to think that this strike should hold as support. Let's continue to play the tape out. You can see we end up pulling back. We're retracing a little bit. This zone ends up holding, and we continue to go up. The absolute gamma strike has flipped higher. So has the power strike. And at this point, the expectation should be that 590 should hold as support. Continue to play this tape out. We come back to 590. It holds the support, and we end up consolidating, getting pretty compressed here towards the end of the day, and then we get this last 15-minute little spike or pop up. It's pretty neat in my opinion to be able to go back at the end of the day and see this play out. I'm sharing this again for you guys on YouTube. This is proprietary to Quant Trading app, so you do need to be a gold member to access this. That's why I like to put it at the end of the videos, as the information that's shared at the first half of this video is applicable to anyone that is a gamma exposure enthusiast, anyone that has access to gamma exposure within themselves. And I'm trying to put the proprietary stuff towards the end just so you guys can see that there is additional confluences. There's more here than just the gamma exposure. It's being aggregated and it's being put on a chart with the candlesticks so you can actually see its play out. And just as I mentioned before, the more and more you see this, the more and more you become comfortable and the more second nature becomes. You're able to look at this early in the day and say, hey, if we drop down to 550, maybe we'll bounce. Where might we bounce up to? I see the power strikes all the way up here. This is our expected close for the day, so this is 580. Maybe I'll take a look at some 580 calls, which at this point in time, so 10:15 a.m. Eastern time, we'll call it 10:30. These are those 580 0 DTE calls. This right here is about 515, 530. So about $3 and call it $3.25 or so, even up to $4 is what that deep out the money call would be looking like at that point in time. And from here to here, this is a 300-something% return. And obviously, if you're nuts enough to hold this until the end of the day, there's a massive reward here. But I don't really know if that's a great trade holding until all the way here. There's a decent scalp at this point. This is already 100% return, with opportunity to get back in or leave a runner depending on how much size you have for an over 300% return. Regarding the power strike, which would have been 5595, if you really wanted to go really deep out the money and take a look at, this was right around here, so at 10:15, we can say about under $1, call it $1 if you will, up to $4 at this point here, all the way up from the close. Again, as a 0 DTE lotto, this is over 1,000% return, but the more realistic expectation is really going to be around here. So around 200 to 400% return here with opportunity for a runner. That's the type of potential that's there with this type of information, and the risk is not that high. And this is why a lot of the focus for the upcoming videos for the rest of the year is going to be around this, guys. I'm sorry if you're on YouTube and you're not a gold member. This is premium. This is premium. This type of information is proprietary. I am the lead developer for Quant Trading apps. So majority of this I've developed from scratch, and it is a reflection of the type of information that I like to know and see as a trader. I want the information easily accessible. I want to be able to just glance at one picture and have it be packed with enough information to take maybe 1 to 2 trades a day that are low risk with high potential, high reward. If you're new to this YouTube channel or anything confused you, I highly suggest you subscribe. Check out the previous videos in which I've done. They're packed with so much information. I try to get straight to the juicy stuff in each video. I could spend hours talking about this, but I'm doing my best to keep it concise, but that means there's a lot I have to skip over. Let me know in the comments down below what you've thought of this video. Thanks for watching, guys. Share it if you learned something, and I'll catch you on the next one.